Welcome back to XRP Insider, everyone. Today we have a massive update for the entire XRP community, and honestly, this could be one of the most important periods we've seen for Ripple and XRP in years. As of today, XRP is trading around the $1.41 to $1.42 range, and despite all the volatility across the broader crypto market, XRP continues showing incredible resilience near a very important breakout zone. A lot of traders were expecting a deeper pullback after the recent market cooling phase, but instead, XRP has managed to hold support surprisingly well. That alone is getting attention from analysts, institutions, and even traditional finance players who previously ignored the asset completely. What's making this even more interesting is that the overall market sentiment around XRP is slowly shifting from uncertainty to cautious optimism, especially after several institutional milestones and major regulatory developments earlier this year. Investors are now watching closely because many believe the next major move for XRP could already be building quietly behind the scenes. And if momentum continues increasing, the coming weeks could become extremely important for the future direction of Ripple and the entire XRPL ecosystem. Now, one of the biggest stories shaking the market right now involves UBS. According to recent reports, XRP experienced a noticeable surge after UBS disclosed exposure to Ripple through a new SEC-related filing, and this instantly reignited institutional interest across the market. For years, retail investors were the main voices supporting XRP, while many traditional financial institutions stayed cautious because of the SEC lawsuit and regulatory uncertainty. But now, things are beginning to change dramatically. When a global banking giant like UBS starts appearing in conversations connected to Ripple exposure, people pay attention very quickly. This is not just another random crypto rumor circulating online. Investors see this as a possible signal that large financial entities are becoming increasingly comfortable with Ripple's infrastructure and long-term utility. And remember, institutional confidence often arrives quietly before major price expansions happen. Many analysts are saying this is exactly why XRP continues holding its ground, even during periods where other altcoins struggle to maintain momentum. The market understands that institutional positioning usually focuses on long-term infrastructure plays rather than short-term hype cycles. That's why traders are carefully watching every single update connected to Ripple partnerships, banking integrations, and global payment expansion, because those developments could ultimately become the foundation for XRP's next explosive move. At the same time, another headline generating massive excitement across the crypto industry involves Ripple's reported collaboration with JPMorgan and Mastercard. According to circulating reports, Ripple allegedly completed a historic settlement on the XRP ledger in coordination with both financial giants, potentially integrating XRPL into live institutional banking systems for cross-border tokenized treasuries. If this development continues expanding, it could represent one of the most significant use case validations XRP has ever received. For years, supporters argued that Ripple's technology was designed specifically for enterprise-grade financial infrastructure, and now many believe those claims are finally materializing in real-world applications. Cross-border settlements have traditionally been slow, expensive, and inefficient, especially for large institutions moving money globally. But if XRPL is successfully helping facilitate tokenized treasury operations between major banking entities, that changes the conversation completely. Suddenly, XRP is no longer viewed only as a speculative crypto asset. Instead, it starts being seen as a functional bridge for modern financial systems. Investors are paying close attention because institutional adoption narratives often create entirely new valuation models for digital assets. The more real-world banking integrations Ripple secures, the stronger the long-term bullish case for XRP becomes in the eyes of many market participants. Another major factor supporting bullish sentiment right now is the ongoing whale accumulation happening quietly behind the scenes. Data from the first quarter of 2026 reportedly shows that wallets holding more than 1 million XRP accumulated over 1.2 billion tokens, despite periods of price suppression and market uncertainty. And this is extremely important because whales usually move strategically. Large investors rarely accumulate aggressively unless they believe significant upside potential exists in the future. Many retail traders panic during sideways consolidation phases, but whales often see those same periods as opportunities to build positions before major breakouts occur. That's exactly why analysts are studying these wallet movements so closely. Even during moments where XRP struggled to break above resistance zones, large holders continued increasing exposure instead of exiting positions. This suggests strong conviction among high-net-worth investors and institutional participants who may believe the current market still undervalues Ripple's future role in global finance. Some traders even argue that this level of accumulation resembles patterns seen before previous major XRP rallies. While nothing is guaranteed in crypto, sustained whale buying during consolidation usually sends a very powerful message about long-term market expectations and investor confidence. And then we have the ETF momentum, which many people believe could become one of the biggest catalysts for XRP moving forward. Ever since XRP was officially classified as a commodity earlier this year, institutional inflows into spot XRP ETFs have reportedly climbed toward approximately $1.44 billion cumulatively. That is a massive development because ETF access opens the door for entirely new categories of investors who may not want direct exposure through crypto exchanges. Pension funds, wealth managers, traditional investment firms, and conservative institutional investors often prefer regulated financial products over managing digital wallets themselves. So when ETF inflows start increasing steadily, it usually signals growing mainstream acceptance. This is one of the reasons why analysts are becoming increasingly bullish on XRP's long-term potential. The market is slowly transitioning from pure speculation into broader institutional participation. And historically, when large amounts of institutional capital begin entering a digital asset ecosystem consistently, price appreciation often follows over time. Many traders are now comparing XRP's current ETF trajectory to early institutional accumulation patterns previously observed in other major cryptocurrencies. While volatility will always remain part of the market, ETF momentum is clearly becoming one of the strongest bullish narratives surrounding XRP right now. Of course, we cannot discuss XRP without talking about the SEC lawsuit finally reaching its conclusion. After years of legal battles, uncertainty, fear, and endless speculation, the Ripple versus SEC case has officially ended, and that alone removed one of the biggest obstacles hanging over XRP for years. This lawsuit created enormous pressure on Ripple and heavily impacted investor confidence across the market. Many exchanges delisted XRP during the legal uncertainty, and institutional players avoided involvement because nobody wanted regulatory complications. But now, with the case behind Ripple, the entire environment surrounding XRP looks completely different. Investors who previously stayed away are slowly returning, while institutions finally have greater clarity regarding regulatory treatment. This is one reason why XRP sentiment has improved significantly throughout 2026. Traders are no longer focused only on legal survival. Instead, the conversation has shifted toward adoption, infrastructure, partnerships, ETFs, and future expansion opportunities. That transition is incredibly important because markets tend to reward assets once uncertainty disappears. The end of the SEC lawsuit may ultimately be remembered as the turning point that allowed Ripple to fully pursue institutional integration and broader financial adoption without the constant cloud of regulatory fear hanging over the project. Now attention is increasingly shifting toward the upcoming Clarity Act, which many industry participants believe could provide the next major boost for the entire digital asset sector. This legislation is expected to establish a much clearer legal framework for cryptocurrencies in the United States, something the market has desperately wanted for years. Right now, investors, exchanges, developers, and institutions often face confusion because regulations remain inconsistent across different agencies and jurisdictions. But if the Clarity Act delivers the legal certainty many are expecting, it could unlock significant institutional growth across the crypto market, especially for projects like Ripple that already operate closely with financial institutions. Analysts believe XRP stands to benefit more than many other assets because Ripple has consistently focused on compliance, enterprise partnerships, and regulated financial integration. A clearer regulatory environment could accelerate adoption of Ripple services inside traditional banking systems, while encouraging more institutions to explore XRP-related infrastructure. Some experts even argue that regulatory clarity matters more than short-term price action because it creates the foundation for sustainable, long-term growth. That's why the market is watching every development surrounding this legislation very carefully, knowing that its outcome could influence the future trajectory of digital assets across the United States. Another development that has not received enough mainstream attention yet involves Ripple's banking ambitions inside the United States. Reports indicate that Ripple received conditional approval for a U.S. National Trust Bank charter from the OCC back in late 2025, and by April 2026, operations reportedly became fully active. This is a massive milestone because it allows Ripple to offer digital asset custody services within the regulated U.S. banking system. Think about how significant that could become over time. Traditional financial institutions want secure and regulated custody solutions before entering digital asset markets aggressively. By positioning itself within the regulated banking framework, Ripple could potentially become a trusted infrastructure provider for institutions exploring tokenized assets and blockchain-based financial systems. This also strengthens Ripple's credibility in the eyes of regulators and enterprise clients. Many investors believe this banking expansion strategy demonstrates that Ripple is not simply trying to survive within the financial system. It's trying to become part of the financial system itself. That distinction matters because infrastructure companies often gain enormous long-term value once they establish themselves at the center of institutional operations. As more details emerge about Ripple's banking activities, many analysts believe the market may start reassessing XRP's long-term valuation potential entirely. When we shift toward technical analysis, the XRP chart is becoming increasingly interesting. Analysts have pointed out that XRP has been coiling within a tight consolidation range for nearly 3 months, and historically, these types of structures often lead to explosive breakouts once momentum finally returns. Right now, the key level everyone is watching sits around the $1.50 area. Many technical traders believe a strong daily close above that zone could trigger significant upside momentum toward approximately $1.70 in the near term. The reason this level matters so much is because it represents a psychological and structural resistance area where sellers previously regained control. But if buyers successfully reclaim it with strong volume, market sentiment could shift extremely quickly. Traders understand that consolidation periods cannot last forever. Eventually, price breaks either upward or downward, and right now many indicators suggest bullish pressure may slowly be building underneath the surface. Momentum traders are already preparing for potential volatility because once XRP starts trending decisively, price movement can accelerate very rapidly. That's why both retail and institutional investors are watching this chart setup so closely over the coming weeks. At the same time, short-term analyst consensus for May 2026 remains cautiously optimistic. Most forecasts currently place XRP within a projected trading range between approximately $1.40 and $1.60 throughout this month. While some traders may feel disappointed by slower price movement compared to explosive meme coin rallies, experienced investors often view consolidation phases differently. Stable accumulation and strong support zones can create healthier long-term market structures compared to unsustainable vertical spikes. Analysts point out that XRP maintaining stability above major support during uncertain macroeconomic conditions is actually a positive signal. It demonstrates that buyers continue defending important price levels even without extreme speculative hype driving the market. Some traders are also watching Bitcoin dominance carefully because altcoin performance often depends heavily on broader crypto market conditions. If Bitcoin stabilizes while institutional capital continues flowing toward XRP-related products, analysts believe XRP could gradually outperform many competing assets during the second half of the year. Patience remains critical in markets like this because major breakouts frequently happen after long periods where price action appears relatively quiet and uneventful. Long-term predictions for XRP are becoming increasingly ambitious as institutional narratives continue strengthening. Some bullish forecasts for late 2026 now range anywhere between $2.80 and even $8 under highly optimistic scenarios. Of course, those higher projections depend heavily on several important factors aligning successfully. Continued ETF inflows, broader institutional adoption, successful implementation of the Clarity Act, and expansion of Ripple's banking integrations all play major roles in those forecasts. Critics argue those targets may still be overly optimistic, especially given ongoing competition across the crypto industry. However, supporters believe XRP's utility-focused approach gives it unique advantages compared to purely speculative projects lacking real-world enterprise adoption. What makes XRP particularly interesting right now is that the bullish case no longer depends solely on retail excitement. Instead, Much of the optimism comes from infrastructure development, institutional positioning, regulatory clarity, and financial integration narratives. That combination creates a fundamentally different environment compared to previous crypto cycles. Investors are beginning to ask whether Ripple could eventually become one of the dominant blockchain infrastructure providers supporting global payment systems and tokenized financial markets in the future. Something else worth paying attention to is how sentiment around XRP has evolved dramatically compared to previous years. There was a time when XRP discussions were dominated almost entirely by legal fears, exchange delistings, and uncertainty about Ripple's survival. But today, the conversation looks completely different. Investors are now debating ETF inflows, banking charters, institutional treasury integrations, and long-term infrastructure expansion. That shift matters psychologically because markets often respond strongly when narratives transform from survival stories into growth stories. Ripple spent years fighting regulatory battles while continuing to build partnerships and infrastructure quietly in the background. Now that many of those obstacles are finally clearing, investors are beginning to focus more on future potential rather than past challenges. Some analysts even believe Ripple's resilience throughout the lawsuit period strengthened community conviction significantly because supporters remained loyal despite enormous pressure. That level of community belief, combined with increasing institutional interest, creates a unique dynamic rarely seen in the crypto market. Whether XRP ultimately reaches the higher price targets or not, there is no denying that the project has entered an entirely new phase of market perception during 2026. At the same time, the broader macroeconomic environment will still influence XRP's trajectory moving forward. Interest rate policies, global liquidity conditions, geopolitical tensions, and overall crypto market sentiment continue playing major roles in digital asset performance. Even the strongest projects experience volatility during uncertain macroeconomic periods. That's why many experienced investors remain cautious despite the growing optimism surrounding XRP. They understand that markets move in cycles and unexpected events can quickly change short-term momentum. However, many analysts argue that XRP now possesses stronger fundamental support compared to previous years because institutional participation has increased substantially. The combination of ETF inflows, banking integrations, regulatory clarity, and whale accumulation creates a more mature market environment around XRP than what existed during earlier speculative rallies. This does not eliminate risk, but it may provide stronger long-term structural support if adoption trends continue expanding globally. Investors are now balancing excitement with realism as they evaluate whether Ripple's infrastructure ambitions can successfully translate into sustained market growth over the next several years. Another reason traders remain excited involves the XRP ledger itself, which continues evolving beyond simple payments. Developers and institutions are increasingly exploring tokenization, decentralized finance applications, cross-border settlements, and enterprise blockchain solutions built around XRPL infrastructure. As tokenized real-world assets become a larger discussion inside traditional finance, many analysts believe Ripple's ecosystem could benefit significantly from that transition. Financial institutions want efficient systems capable of handling fast settlements, low transaction costs, and regulatory compliance. Ripple has spent years positioning itself within exactly those conversations. Some investors believe the market still underestimates how important blockchain-based settlement systems could become over the next decade. If Ripple successfully captures even a small percentage of institutional tokenization activity globally, the long-term implications for XRP demand could become extremely significant. This is why long-term holders continue watching ecosystem development closely rather than focusing only on short-term price swings. They see Ripple's strategy as a long-term infrastructure play tied directly to the modernization of global finance itself. As we move deeper into 2026, many market participants believe XRP may finally be entering the phase supporters waited years to see. Regulatory clarity is improving, institutional participation is increasing, banking integrations are expanding, ETF products are attracting capital, and whale accumulation remains strong despite market volatility. Individually, each of these factors would already be important, but together, they create a powerful narrative supporting XRP's long-term growth potential. Of course, crypto markets always remain unpredictable, and investors should stay realistic about risks and volatility. Price corrections, market uncertainty, and sudden shifts in sentiment can happen at any time. But right now, the overall direction surrounding Ripple appears stronger than it has in a very long time. Analysts, institutions, and retail investors alike are paying close attention because they understand the next major breakout could reshape the entire XRP conversation once again. If XRP successfully pushes above critical resistance zones while institutional adoption continues accelerating, the second half of 2026 could become one of the most important periods in Ripple's history. And finally, the biggest takeaway from everything happening right now is that XRP is no longer being discussed only as another speculative cryptocurrency. Increasingly, it is being viewed as part of a much larger conversation involving institutional finance, banking infrastructure, tokenized assets, and global payment modernization. That shift in perception may ultimately become more important than any short-term price target. Markets can fluctuate daily, but infrastructure narratives tend to build value over many years if execution continues successfully. Ripple now stands at a critical moment where regulatory victories, institutional partnerships, ETF growth, and banking expansion are all beginning to align simultaneously. Whether you're bullish, cautious, or simply watching from the sidelines, there's no denying that XRP has become one of the most closely monitored assets in the entire crypto market right now. The coming months could determine whether Ripple successfully transitions from a controversial crypto company into a core player within the evolving digital financial system. And if that happens, many investors believe today's consolidation phase may eventually be remembered as the calm before XRP's next major move.